Hello everyone, Alice here from Safi Financial Network. Today is November 12th, 2022. Okay, so here's another sentiment analysis video, uh, because sentiment is very important time to time, not always, but in this environment, we should pay attention to the sentiment and combine it with price action. In previous video, I posted about the Dow Jones. In next video, I'm going to post a video about the S&P 500. And if you combine these three and even Nasdaq after that, so you will get some prediction about the market. This is not a forecast. We want to be on the right side of the trend. So that's it, to see if there is a good setup is coming out and we can just take advantage of it. So we don't care if market is going up or down. As a trader, as an investor, we want to go up. But as a trader, we don't care basically. We just need to be on the right side of the trend and we need to just find out the setup properly. So this is the first gauge, fear and greed index. So as you see here, we are getting back to the greed side, which is remarkable. Just the market sentiment is changing uh, dramatically from the extreme fear, which everyone was calling like we're going to the recession 2 3 weeks ago. Now everyone is saying we are get back to the bull run and probably the bottom was nailed in middle of the October. And right now I would say fear and greed or any sentiment indicator gauge, you should read it through market trend. So if we are in, just imagine, if we are in a bear market, like we are, any extreme greed sentiment gives us a warning signal. This means the bullish momentum within the bear market is going to be finished or already finished. If we are in a bull market, which is the trend is up, and we are in secular bull market, any extreme fear or fear gauge along with price action gives us a very nice buying opportunity. So again, look at the trend. This is very important, folks. Look at the trend. If we are down, I mean in bigger scale, if we are down, any greed to extreme greed sentiment along with price action gives us a fantastic selling opportunity. If we are in bullish momentum, I mean secular bull market like we had last 12 years ago, started and just it just the stretch until 2021, end of the 2021, any extreme fear or fear gauge showing us a very nice buying opportunity. So right now we are at bear market. This is getting to the greed and extreme greed. Can it go to extreme greed? Sure, yeah, it can. Probably next days, Monday, Tuesday, even Wednesday could be the last. But when it gets closer to the extreme greed, that would be great idea to probably take advantage of it. Short the market, or if you don't want to short the market, at least make sure that lock your gain if you have long position. So that's the fear greed index. This is very nice. The next indicator I want to show you is PCC. So this indicator gives us a put call ratio, which means if you're at the top, lots of put options are intact. And if you're at the bottom, means people are getting bullish and the call option um, compared to put option is very high. So if you want to combine this with S&P 500 chart, and let me do this now. So this gives us very nice metric for the market. So if we are at this area, which is pretty overconfident, I would say traders are very sorry. If we are at this areas, this means traders are losing their faith to the market, and we are due for a bounce even within the bear market. So if we are at the bull market, something like this, this gives us a very, very nice buying opportunity. So this is a COVID crash. And as I said, we were into a bull market. So uh, any oversold condition, which there are lots of put options here. So as you see here, this is put call ratio, right? So when this gauge, this blue line is on the top, this means lots of people are bearish and there are lots of put options there. If we are down there in the red area, so lots of people are bullish and there are lots of call options there. So when sentiment is high, we're gonna sell, especially in bear market. When sentiment is low during bull market, we are going to buy. So right now the bear market, so we are looking for kind of overconfident people. So as you see here, here's the trend line, and we are just breaking down last week, which is fantastically coming along with our sentiment indicator gauge, right? So this is a dead cat bounce nicely, and people are getting overconfident. Again, it comes to my bearish level probably next week, first 2 3 days when we are getting there. So that would be great. Again, idea to take the profit at least off the table. And if you even if you don't want to short it, just be careful that probably that's going to be a nice dead cat bounce, something like this. So just here we were there. So just imagine even we were sorry, this one we were there. So even we are not that bullish right now. So we are very, very bullish compared to this one, and even compared to this one, which is coming along to this line. So right now, people are very, very bullish. And here, again, something like the reading is the same as we were top here. So look what happened after that. So just coming down sharply, market is getting bearish again. People are buying back, going to the top, and then coming down sharply here again. People are getting bullish again on the top of the market. And this is the reading right now. So people are super confident. We are at the top of the market, very, very bullish. And look where is our indicator. So this is pretty nice. And within the bear market, any um, any ripping to the upside would be selling opportunity. Within the bull market, again, I'm just repeating myself just because this is for educational purpose. Within the bull market, any dip would be buying opportunity. So that's going to be buy the dip, buy the dip. So buy the dip works in bull market, and sell the rip works in bear market. So we are at a bear market right now. And next slide is going to be dollar index. So this is dollar index, and as you see here, dollar Dixie, actually we're on the top at the 113 level, sharply coming back down due to CPI number, and everyone is betting that Federal Reserve is going to pivot or even slowing down the interest rate hawkish tone, which I believe, I don't know. Basically, I should say, I don't know, even if they want to do that or not, but we have some downside target, and probably that's going to be the bottom for the Dixie, and we will get back to another bullish momentum. And we are at 106, and probably 104 to 102. That's going to be spot for the bottom. And this week, I would say this week or next week, is going to be the bottom of the dollar for a very, very nice bottom. And after that, I don't know, even if Fed wants to keep the same momentum in interest rate or they want to slow down. But Dixie shows me that we are going to see a bottom in next 2 3 weeks, and then setting up for another bullish momentum to the upside. I don't know if you are going to take out this pivot or just go in there, but this is going to be bottom. So again, all the things are coming together when we are at this stage of the game, when we are seeing comparing to S&P 500 and sentiment and Dixie chart, everything shows us the rally, the one that we have seen since last October. It's going to be finished probably by end of November or maximum stretching to early December. I'm not sure about the early December, but let's give us room, like a safe room, to just make our expectation realistic rather than just hoping for the next week would be the top and then we sell and then market is going higher and higher. So at least that gives us some expectation, and we are looking for a reversal in dollar and reversal in stock market probably next 2 3 weeks. And I think I wrapped up everything for the sentiment. This is a 10 minutes video, short video. And next video is going to be S&P 500. If you haven't watched my Dow Jones analysis, just look at the Dow Jones analysis as well. There are lots of good educational material there. Have a nice evening. See you on the chart. Bye-bye.